Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, May the 6th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, we believe wave one is done. We're in the process of a multi-year decline toward a 786 retracement. Again, that comes back from in May of 2007, we kind of bottomed at a price of 70.53. 15 years later, as we were talking about this many years in advance, we were going to go up toward 115, 120 was the goal before we got our retracement. We went to a 114.72, not too shabby. Now we're working on a push lower. Is this still going to hold this 618 to go reversing, or are we going to get our deeper retracement we've been looking for? Until price proves otherwise, this is where we believe we're headed. Looking at the charting platform, we can see from that bigger picture from the COVID lows, which happened over here right around that 89 low up to the current high, we're kind of holding this 98 area, 98.60 area. We came down, dipped, bounced above. This does not look real bullish as we'll drill down on the lower time frame. So I was expecting a little bit deeper retracement. Maybe we don't get it yet, but at some point I do expect a deeper retracement while we work our way down toward 94, 87. Potentially we're looking for our 80 zone somewhere between that 82 and 78. That's kind of why we're thinking about 80. So this is the bigger picture. Probably take us a few more years to get down here, but you can't not ignore the fact that from this COVID low to that swing point high, price is holding at a 618. What would that mean? If it holds and we start breaking back out, then you have some upside targets, 117, 119, 123. Maybe we go up into this 127, 130 area, etc. So I don't think that's what's going to happen based on my humble opinion, but based on our technical analysis, until price proves otherwise, we expect we're going to retrace lower more than we're going to go higher. But it is a thing to watch. All right. So drilling down to the lower time frames, we could see why this is not real bullish. Let's go to an hour. We could see this latest price action. As we bounced off that 618, we went into this zone. We kind of corrected. Now we went another push. This looks more like a three-wave type of move. And we're starting to see some lower highs and lower lows. So I would not be surprised to see us probably push to make a new low. Still possible we could bounce and go up a little higher, but that was the plan from the start. This bounce was unlikely going to go breaking out, that we'd get some sort of retracement before another push lower. I was expecting a little bit deeper retracement on these lower time frames. For example, from this prior swing point down to this swing point, I was hoping to see at least about a 618 retracement to the upside, kind of setting the tone that the latest down move, we get that 618 retracement, we fail around this 102 area, and then we go plummeting further. Well, we didn't get anywhere near that. got up to almost 100, and we need to go up another couple of more points. But we didn't see that here, so based on this overlapping chopping action here, this does look like a three-wave correction. So that starts to let us believe we're more than likely going to start pushing lower and make a new swing point low. That's on the lower time frame. However, on that higher time frame, we still, until we start breaking below that 618 from that COVID low, which is around that 98 zone. So we start breaking that, that will set the tone for much further downside and limit how far we can bounce back to the upside. Fair enough? So let's look at that one more time. Come over here from that bigger view. And from the COVID low to that high, we did bounce off that 618 right around that 98 zone. So if we can start breaking below that, we make a new swing point low, we start closing below that 98, then we have a 75% chance we're coming visit 85, 70 plus, we're going to come visit 82. So you can see how important this is. That price ultimately starts closing below that 618 level from that COVID low to the current high. That's extremely important, Mr. Tucson, right there, buddy. We start closing below that, then again, the percentages just go through the roof. That 75%, we start closing below this 98 area, that we have a 75% chance we're going to go visiting this 85 target. And a 70 plus percent, we're going to go visiting this 82 target. And that's right at our original target zone where we think we're headed. So prices should tell us what we should know in the near future. Are we going to keep chopping along? Well, what about to the upside? If we break down below 98, which is only about a point and a half away, we start closing below that 98, then it looks like we're coming down. But what about this bounce holds? Where do we need to go before we start talking about a breakout to the upside? Well, there is a massive amount that we have to cover and break above before we start getting real bullish. And that would be we need to come above our Magic Fibo, which is way up here in that 104 level. That's minimum. We would have to get this out of the way, my little drawing tools. We'd have to come up considerably higher, a good 5+ points to get up above this Magic Fibo. And from the prior high to swing point low, we would need to come up above this 105 area to set the tone. From that high to this low, we could start breaking above the Magic Fibo / our 106 area. Then we start to say the opposite. Well, now we'd have a 75% chance we'd go toward this 112, 111.90 area, and a 70 plus we'd go toward that 113.50. So this is what we always talk about, force price to prove its intentions. And that's what I love about our technical analysis. Not only do I think we give a very accurate technical analysis, but there are these lines in the sand, the do not make or break levels that if price does something otherwise, then you have an alternate plan of action. So we always give you your primary plan of action, and then what if we get the opposite to occur? At what point do you give up and say, well, now we're talking about coming here, 75% clip versus a 75% clip. We're going down way over here to this 85. And right now, nothing about this price action says anything but we're coming down lower, as opposed to price action then saying, nope, we're actually going higher. And that's your make or break levels. So it's imperative you have on all your charts our Magic Fibo line, because it is truly magically delicious. And it helps us to understand the make or break levels typically involve, not every time, but typically you see it's always somewhere around the vicinity of those make or break levels. It's amazing how often that magical Fibo line comes into play. So this is by no stretch, because it looks like a three-wave move and we're correcting, that this is a done deal, we're breaking lower, just does not look very bullish. But the same rule. This is why we use Fibonacci's. We use Elliott Wave. We use, of course, our magical software. We're going to go over that in a second. But from this prior swing point low to the current swing point high, we still want to see if this is going to continue to break lower. We need to start closing back below this 98 area. So not only is it the Magic Fibo and important level, we talk about breaking to the upside to set the tone, while 618 retracement, right? You see how 618 retracement to the upside along with the Magic Fibo, we start breaking above that, then the tone set we should go higher, versus now from this low to that high, ultimately we get a double whammy. We have from that COVID low, right? That's my 618 over here, and that was that COVID low to the high we showed you several times. My 618 comes into play. We've on this latest little move from the low to the high. There's your 618 level backing up right at the same zone. See it? 618, 618. So if this latest bounce fizzles and we start closing back below 98, then on the short term, we're looking to go to 97, 97, 97.60, 97.20 area, could potentially continue down to 96, 94. Well, we start seeing closes down in this area, then it sets the tone. We're going to visit this 85, 82. And it's amazing how often price action plays into these moves, and you get these confluence of events lining up in the same area. So, zooming in on current price action. Nothing better than the current hard right price action. Well, you have to know where price has been, what behavior it's used to kind of set the tone to where it ultimately is going to go. But as long as we hold this 98 area, we got the big COVID low to that 618 retracement, we could go up. And if we hold this latest little move, then we're likely going to go up a little higher, still pushing toward this zone. So I won't say because this looks like a three-wave move, Mr. Tucson and others, James, that this is definitely, oh, we're breaking the new lows. Well, I have a high affinity for that statement. If we start closing below this 98 area, then definitely, not only do I think 97, 96, et cetera, down here in the cards, but eventually we should continue on with that much bigger picture that says we should go hunting this 85, 82. So this is what we talk about. Force price to prove its intentions. And what do we do on Tuesdays? We do Elliott Wave. Elliott Wave is very important. It kind of the GPS coordinates, turn by turn, GPS coordinates of where the market's likely headed. So looking at the dollar index, we're expecting more downside, but we do have corrections along the way. And I think we're going to get a very large correction at some point where you get this bigger down move, like we got a very large 618 retracement here that kind of pushed a little bit above the 618 for a brief moment before then making new lows. Well, based on this 345 ABC type of move, we should get another substantial retracement at some point along the line. Is it where we get down here and then we get a several point, maybe from 12 points or so correction before then we continue lower toward our overall target right around that 80 zone? Well, we shall see, but we talked about this, and this line was on the chart years in advance when we started to top and reverse. And I was significantly saying, look, the markets are due for the dollar to give us a nice hearty correction, and it's going to take multiple years. We put this 109 level on this chart years in advance. And this happened here basically in 2022, and we didn't come visit that level until 2024. So years in advance, this was a level on the chart. Now, how do you come up with that? Well, that's why you use and even before we had the swing point low, this level was put on the chart. And it just so happens that the markets found a low in which that level ended up being a 618 retracement. Kind of interesting, isn't it? That we didn't even have this low yet. and we knew this level was going to be a very important zone. And then the market forced us to get a low to that high to that low. That was my 618 retracement area. Interesting how that turned out. All righty. So what does Elliott Wave have to do with it? Everything. Our software tied in with Elliott Wave, tied in with our Fibos, it's all hand in hand. It's a beautiful thing when you understand it. So looking at the euro, we're expecting, based on this Elliott Wave, the euro is likely to go higher before ultimately we get another reversal down. So the dollar is inverse to the euro. That's why we always look at the dollar. If we know where the dollar's headed, we know at the highest of affinity exactly where the euro dollar's headed, aka they're inverse. So when the dollar goes down, the euro dollar goes up. When the dollar goes up, the euro dollar goes down. So this is why we're expecting that euro to give us a substantial bounce off the low, as this is expected to give a substantial retracement off of the high into this zone. Got it? So what does that extrapolate to? Well, bottom line, the dollar ends up going to 80. The euro is going to go up here about 140, 145 area. This is the plan. And then the big picture is this is just an A working on a B. And again, we even talked about it right here. We were very adamant, man, this is an opportunity to go long the euro dollar because we're expecting thousands of pips in a retracement. And then we're going to look for ultimately another push lower. Well, everybody understands after you go A, B, what's next? You got a C coming back down, and we're likely going to make new lows below that level. And we would get a C target into the future somewhere down in the lower 80s or even lower, because even our target that we're talking about, the dollar index, should take us multiple years, but the same is true with the dollar index. We're expecting this retracement for wave 2, but what's done after wave 2, you go up in a wave 3 and you make new highs, right? So at no point do we expect the euro to continue to decline and ultimately go to the bottom and keep going and never go down, while the dollar just keeps falling and falling and falling and never bounces up. We're expecting this to come down, retrace, and then go breaking out to some not all-time new highs. If you go to that dollar index back in the 80s or 70s, way back when, see if I can go to a monthly chart to show you, it was up in the 160s back many years ago. Let's go to a monthly. We could probably get there. Yeah, you can see here back in the 85, 86 area, we went all the way to about 160, almost 170. So even if we get this wave 2 correction where we're thinking, then we go breaking out to new highs, still got a long way to go before we go to all-time highs. And that would be way up here in the stratosphere. So we shall see how this plays out, but this is why we kind of give you a picture. We want to give you that high-level overview. And then you can understand, well, as my picture and where we're going. And the toughest part of the picture is the timing, how many years. Well, during that correction, I didn't know it was going to take 15 years, but we were short the euro dollar for many years when we were way up at its 160 range. And we said the euro was going to go down to parity and below. Like, wow, how did you know that? Well, that's the technical picture. And sure enough, right, Ian, it took us, didn't know it was 15 years later, but we went below parity. And even as we got that latest bounce, and this is on the dollar index, but as you go to the euro, same picture, that when we saw this, we were like, man, this is a great opportunity. When we went below parity, I said it back in 22. I said, man, we need to be long the euro because we got a multiple thousands of pip bounce that we're looking to come somewhere between that 140, 145 area. And it would take multiple years to get up there. And sure enough, we bounced, we got this correction, and now we're looking for more upside. We do have some resistance. We got to get through the Magic Fibo on this monthly chart. But once we start clearing that 118, 119 area above the Magic Fibo, then you can see your extensions. 125, 128, 139, 140, 145. So it fits perfectly with what we're looking for. And I believe we're going to see a multi-year, and it's already been a few years already, but multiple years that we just kind of stair step and climb our way into this for that bigger A going up in B. And then we're going to come back down in C and likely make some new lows. Well, when should that take place? Depends on how long it takes to get up here. But if we're not up here until 27, for example, then it took from 22 to 27 for this 5 years. So if we then say another 5 years or so to decline, we're talking maybe in the 2030s, the next decade. So this is what I'm talking about. Long-term picture, but price has proved its intention so far. And what do we have on the euro dollar? A beautiful 618 retracement from the original 0.95 low up to the high, to the retracement where we said, let's reestablish our long, add to our position. And now we're starting to break out toward the upside. Yes, we still got some resistance up here. So my next target is going to be around that 1850 area. It's going to be tough to break above 1850 because look who's sitting there. The big Magic Fibo line. Critical. But I would suspect before we get up to this 135, 145, honing in on 140 to 145, would be we're likely on this monthly chart going to go breaking above the Magic Fibo, get some sort of pullback toward the Magic Fibo to bounce off of it before we can get up there. That's the high probability target. Well, in the lower time frames, what were we talking about weeks ago? That the euro, based on its current price action, was going to make a move, highest of highest probability. We were going to go to that 113.60, 114.95, and look at what we did. Can't make this stuff up. And since we got there, what are we doing? Starting to retrace a little bit. That's typical. You typically, as you climb the Fibo ladder to the different extensions, you typically ping pong between these levels as you work your way higher. Amen? And from the low to the high, in order for us to change our tune and go, uh-oh, well, maybe the dollar is going to go breaking out, make a new high, and this euro is actually going to come down and make a new low. Well, we need to see price come back below the Magic Fibo line, back below this 108 area before we'd even start thinking about the euro going below this 102 bottom. Got it? So that's a long way off. You're talking 600 pips or so before we can start thinking, uh-oh. So even if we retrace back to the Magic Fibo to bounce off of it, like we did over here, that's fine. I kind of said, when we break it, we'll likely come back to look for a bounce before we get up here. What did the pound dollar do? That exact thing. It broke above, came back, retested right at it before going up. Well, the pound hasn't finished its job yet. From that prior high to low, when we took out that 129 area, we have a 75% chance we're going up here to 136 area, and a 70 plus we're going up to that 137.90 area, basically 138. Well, we're not quite there yet. So I do expect higher lows, higher highs, and this chopping, grinding, laboring rise to continue. So as we've been saying since this swing point low over here, we should be buying the pound dollar because the dollar is expected to start reverse lower. So the euro and the pound dollars, respectively, we're going to start retracing and going higher. We put these critical levels on the chart, and we said once we cross it, then you got a high probability trade for these to come out. The euro's already reached this destination. The pound is got close, but not quite there yet. So this is why I still think keep buying the dips, and we're likely going to head toward this zone. Fair enough? All righty. Dollar yen, inverse relationship. Well, from the prior low to the high, when we started breaking this 146 area, we said we have a high probability because of that price action behavior, we're going to come down here to 136. Well, of that 1,000 pip trade we discussed in advance, long before it ultimately happened, I kept telling you, watch this 146 level. We start closing a candle body below that, then we have a 75% chance we're coming down here. And over 700 of that 1,000 pips came into play. Now we're bouncing. This looks like another little three-wave correction. So it looks like we're going to get more downside continuing toward our 136, 135 area. Amen? So the beautiful little three-wave move, and we're likely going to push lower. I go with the percentages, and I go based on price action. And it's a God-given talent to read and interpret price on the charts. And there you have it. So I was warning you about this bounce. Be careful that I didn't expect this to go breaking out, obviously, that we're looking for a retracement to then another push lower to fulfill this target. But that trade we set up weeks in advance, saying once we break below 146, set an alert. And then you could target about 1,000 pips, in which you've achieved 700 of that. Now we bounced in another little correction, and I still think we have another 600 pips or so back to the downside from where we currently are to get to that 136 target. All right. And the pound yen is another one we're watching from the prior low to the high. A lot of overlapping chopping. We get in higher lows. We got highs, lows, lower highs, lower lows, lower highs, lower lows, lower highs. We got our lower high descending trend lines from the bigger one to the most recent ones. So there's a lot of resistance up here. And once we start closing below this 186 area, we did get a big wick in here, but remember, it's the body of the candle, not a wick. So we can get a close down in this area, then we have a 75% chance we go on to 177, and we can start closing below that 187, 186 area. Then there you have it. So the dollar yen has already achieved 70% of that targeted trade. This pound yen hasn't even entered into the let's get started, let's get ready to rumble stage. So I'd keep watching this very closely. Long as we stay below the Magic Fibo, below these trending, lower high trending lines, that is still very bearish. But it is what it is. Once we start closing below this 187-ish level, it sets the tone. So we're going another 1,000 pips down. Amen? And when this thing gets started, man, the pound yen can plummet very quickly. So it doesn't mean it's going to take years to come down here. When this thing gets started, it could be a matter of days to weeks, and you could be down here. So I still have my alert set right around this 186-ish level, because we got a lot of rejection wicks in here. Test, 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 test. And it's a little battle zone from the prior area. So I'm watching that. We start closing below that 187, 186 area. Then the tone is set to go down about 1,000 pips. Got it? That's the plan. So I'm going to just set my alert, wait for it to happen, just like we did with the dollar yen, and just pocket those pips. Any questions on that? So again, we look at Elliott waves. So as we were finishing up the same conversation, if we go to 80, then the pound dollar is going to go up to our target up here, about that 160 to 170 level. So I'm kind of targeting somewhere around that 160, 165 area, which is still thousands of pips away. And again, even with this, all we're looking for is a retracement between a 50, 618 retracement. Where does that come from? All-time highs over here to the recent lows of 2022. And we got a retracement coming into this zone. So we were never looking for the pound to reverse and go breaking all-time highs. We're looking for the pound to make a 50/618 retracement. The euro, we're looking for the exact same type of thing, but we're pushing it one level higher. We're looking for like a 618 to a 786 retracement zone. That's where we get the 135 to 145-ish area. And I'm kind of fine tuning somewhere around that 140 area, right? So same type of move. We're not expecting the euro to go breaking all-time highs. We're expecting to get a retracement into the 618-786 zone before we then go on to make another low. Amen? That's where the A going up into B, coming down in C. So that was on that other chart. This is the A. This will be the B. And then eventually, when we get up here, multiple years later, we're going to come down into a C. That's the plan, right? So that on this chart is what you see here. A going up in B, coming down in C. So again, I still think we're probably a few years away from this. I'm not trying to tell you, hey, when we bounce here in a matter of 12 months, we're going to be here. Well, it took us over 2+ years to get to this point, from 2022 to this correction finally ending in 2024. So it took us well over about 2.5 years to get to this point. Now we're just starting to bounce, so it could still take another few years to get up here. But that's the plan. Bottom line is bottom line. If the dollar retraces to where we believe it's going, remember how we talked about this years and years and years in advance, we would go up here? Well, I'm just as confident we're likely coming down here before we're done. But yes, even during these years and expectations of a move, you do get some pretty big pullbacks along the way. That's just standard protocol, as the markets never go in one direction. You always get corrections. And a lot of these end up being 618 style retracements, which is unbelievable how often that happens. Like this latest move here from that high to that low was a 618 retracement. It failed, which we pegged that years in advance to tell you, yeah, once we start saying below that, we remain bearish. We went right to it, nibbled up in here and said, ooh, we're going to go breaking out. I kept saying, like, we're going to get rejected, make some new lows, and continue our journey. And even stated this was going to take multiple years. And we're in it about 3 years, coming up in 3-year zone, and we still got a ways to go. All right. All righty. I think we're pretty set on the Forex. If you got any other pairs, you can recommend or put in the chat which pairs you want to review. But for now, let's move on and look at the bigger picture, and that is with the markets. Where are we going with the markets? Remember this danger zone. How about that, Emil? Went right to it. James? Ian? Harold? Can you make this stuff up? It's a beautiful retracement into what's our danger zone. Typically, your danger zone from swing point high to swing point low, 50, 618, 786. I typically focus more in the 618, 786 and a 50% retracement, but it's part of the equation. I love to see 618 retracements to kind of give you the big picture and when we should get a little pullback. Well, remember last week I said highest of highest probability in the last few weeks. From this swing point low, we got this bounce. We looked for a 618 bounce retracement, came to the support zone, and then we said, we got the highest probability. We're going to go to the Magic Fibo line. Look at that. Can't make that up. Went right to it. Then what did I say as we were grinding higher all of those weeks higher? I said, once we get up here, take your profits because we're due for a 3-wave correction. That's what we hope. That was going to be the line in the sand will be dictated on what this does. Do we get a 3-wave correction and come back somewhere in this zone of that 5,200, maybe down to 5,000 zone? And then we go for that blow off top, 64, 65, 6,600 as we move into late fall. That's kind of the plan. That's my number one direction. where I think we're headed. So how deep does this go? I want to see what price action does for us. What we don't want to see is a 5-wave move down instead of a 3-wave, followed by a 3-wave correction. Then we start to see this type of behavior, then the likelihood we're going to go much, much lower, and this blow off top would become extremely low probability. Amen? So what did I say coming weeks? I said when we get to the Magic Fibo, we could A, just slice through it and go straight up. And I said we got about a 5% chance of that. So see what percentages do for you? We went here and we didn't go slicing through. So I said we had a 95% chance we're going to get up into this danger zone and start a retracement. Now, this doesn't mean, because we have FOMC on Wednesday, that we can't get one more little pop and we start pushing a little bit higher toward that 58 zone before then we get the bigger correction or the bigger turn down. And then we get our 3-wave correction back up, and it's Elizabeth, I'm coming to join you, honey. And again, this would be off the table. But so far, so good. We pegged that bounce, we pegged this retracement, and we said exactly where it was going to go. Weeks in advance. We're there. So what do? I suspected we'd get some sort of correction. Now, is this going to give us a little dip and one more push? I'm looking for a big retracement to come into play. And that is toward that 618,786 area, which again, from the recent bottom tariff talk, it's all about the tariffs. The world is ending because we're talking tariffs. The U.S., shame on the U.S. for wanting to have equal trade. And we don't get the raw end of a trade deal. Shame on us. That destroyed the markets. Well, it's not about not about what the markets need or what Wall Street needs. It's about middle America. We need manufacturing. We need to create our antibiotics. We need to have all that back in this country and not rely on a country like China to produce all our goods and services that we need when they, I promise you, they're not our friends and allies. They would love for us to our demise. I digress. But as far as this retracement, we're due for a big one. Is it going to be FOMC? The markets are prime looking for a rate cut. What happens if they don't give us a rate cut on Wednesday? And they say, nope. And they could be real negative about it and say, I don't see us cutting rates anytime soon. That could be that push down, right? A little 3-wave correction. And we look for this to come somewhere around that 5,200-ish down about 5,000. So we're talking a good 500 to 700 pip decline, or 100-point decline. So be careful. Yes, I do think we're still going to 64, 6,600, but I think we need to see price action give us a beautiful retracement before we go breaking out, just like we did here, 618 retracement before we reach the Magic Fibo. Now, what I'd like to see is a 3-wave correction coming down somewhere around that, even as low as high on the upside is 53 to 5,000 zone. So we get some sort of 3-wave correction into that 53 to 5,000 zone. Then we go breaking out, break above the Magic Fibo, retest it to set the tone. We go on that 64, 66. So nothing about price action says we're not going up here. But based on this danger zone, this is where our correction will mean everything. We get a 5-wave correction followed by a 3-wave back up, then this is off the table. If we get a 3-wave correction, then we start breaking out, then this is just reiterating the fact that we're going up here. So this is what I told you coming into this move up here. We need to see at this point, do we get a 3-wave correction to set up the blow off top? Or do we get a 5-wave correction followed by a 3-wave correction back up to set the tone? Elizabeth, I'm coming to join you, honey. The big one is coming. So Continue to watch this closely. Would not be surprised that this corrective action, as we get into FOMC, maybe FOMC is the stimulus. Like I was saying, maybe they come out and say, nope, we're not changing rates. We're going to keep them the way they are. And in the foreseeable future, we don't see it. And that might be enough to disappoint the markets that's just begging and pleading for a rate cut, that we get that bigger retracement. What if it's the reverse and they shock the markets by cutting rates 25 basis points? Well, then I think we'll get the push higher. And I'd still be careful. Even if that happens, we get a push higher. I still think we're probably, when we finally break that magic Fibo line, that we're likely to come back and retest it before we get up to that 64, 6600 zone. And I've been looking for this coming into summer as we're moving into May, that we may get a multi-week or even a few month correction to get us down into this 53, 5200 zone. Then we start going from summer into fall, late fall, even into the year, we get that blow off top somewhere around that 6400, 6600. So up and until price proves otherwise, I still think we're going up here, but I think we're going to get a bigger retracement first before we can get up here, as opposed to just ripping straight up there. Amen? Either way, the technical picture, once we get a blow off top, is we're going to have a much greater down move, as I've been saying for quite some time. Before we break 7,000, we're going to break 4,000. Amen? So we'll see if that holds true in the big picture. So any questions on ES? Why do I look at ES, mini futures? Because you get overnight price action. SPX, we had a nice gap down overnight because you don't have the price action you do with the futures market. So this is why I like to look at price action overnight. It fills in these gaps that we normally see. Gap ups, gap downs. We see a lot of gaps. And that's because the markets close and they reopen the next day. But you've always heard when they say, well, the market should open up, higher today, or the market should open up down today. They're looking at the futures markets. And this gives us a lot more price action that we can look into. And so far, be careful. Be careful with this up here. Not only are we in the danger zone, but look at this move. This potentially is a three-wave move and could set up the big one. That's certainly on the cards. I still think we're going to get a blow off top, as we've been saying, but it's all about how do we correct now? Do we get 3 waves or do we get 5 waves? That's going to be critical. And I'm here to guide you through it. So don't worry about it. I'm going to give you the make or break levels, as we always do. I still think we're going to 64, 66 area, 100 area before that blow off top. But I think it's going to take us into late fall, toward the end of the year before we get up there, as opposed to this being over right now. Well, maybe this is the high and we stop there, and this ends up being a 3-wave, and then we get the big push lower, and lo and behold, my anticipated move is still, before we break 7,000, we're going to break 4,000, and it plays out. Either way, with the blow off top, still below 7,000, and we're still going to go below 4,000 in the much bigger picture. Got it? So any questions on where we are? Be extremely careful in this zone. Even if we get the opposite and we go blowing off top, or the Fed actually cuts the rates by a quarter point, and we get a nice pop into the zone, we're not in the clear yet. We have to start closing above about that 5,900 to set the tone. Here comes 64, 6,600. So I'm watching what FOMC does tomorrow. Do we get the bigger correction off of FOMC because they hold rates the same and they kind of downplay, well, I don't see us cutting rates anytime soon? That could be enough to get the markets a little sour and get this bigger retracement. Amen. So let's keep an eye on this very closely. Same thing with the NASDAQ. Ditto. What did we say? We got the 618 retracement. We were going to go where? Into the Magic Fibo. When did I say that? I said that days in advance. Expect the markets to grind up to the daily Magic Fibo. Expect it to move down to gold, expect it to move down to Magic Fibo. We'll go over that in a minute. But for days, we said that last week, coming into this week. And then this is a little bit out of date because we got to, this month's action. And then we had the next class. But I said it over here during the correction down in the early month of April. We're looking for the correction. Then we were going to get a retracement to come up toward the daily Magic Fibo. What happened? Pretty much spot on in these markets. We got the correction and we went right back to the Magic Fibo. So I do think even the NASDAQ is likely going to give us a blow off top. Somewhere in that, say, 24,000 to 26,000 range. 23 to 26 is kind of what I'm thinking, but I'm fine tuning a little bit higher, 24 to 26. But do we get a three-wave correction and then the blow off top? Or is this it and we get a five-wave with a three-wave correction and then it's see you later? Danger zone is danger zone for a reason. And across the board, we all hit it perfectly. Dow, or use the futures here. This one's a little short as far as the Dow Jones, just barely a little short. So this might mean we need one more little push. So not only did ES and NASDAQ hit their Magic Fibo, but the Dow needs that last push to get us in there. Then we get the multi-week / into summer type correction before we then go blasting off. Well, one chart we look at to know what the Fed's going to do is this DGS2, the 2-year maturity rate, along with the Fed fund rate. And notice this bounce. I mean, this is a measured bounce going up to the upside. And the Fed looks at this stuff. Believe it or not, everyone thinks that the Fed makes the decisions on what to do. No, they chase this blue line. Right? When the blue line starts falling off, the Fed cuts rates. When the blue line is ripping higher, the Fed chases rates. So far, so good, right? We go through all the big events, come out to a weekly, and we discussed this multiple times in the past. When did we see these big market reactions and market correction? Well, we had COVID. Even before COVID came into play, this was screaming we were due for a big pullback. Time before that, financial crisis of 2007. Rates started falling, the Fed had to chase it, and boom, you know what happened there. Before that, dot-com bubble burst. So this is a very interesting chart to keep an eye on, and it kind of dictates whether the Fed's going to raise rates, cut rates, etc. So drilling at the current price action on this chart, we can see the Fed could potentially cut rates tomorrow. He could shock the market. I don't think they are personally, but they could, because here's the Fed rate up here. We cut it a quarter basis point, would push us down toward the 4.0 and change area, and we're still a few points away from that. But notice how this is bouncing. So when we look at this, this could be a measured bounce. And where does that leave us? You use a 3.2. From that low to that high to this higher low, if we start breaking out, then the Fed's going to look foolish by cutting rates, and this baby goes ripping up, and we start breaking some new highs, starting to head to 5%. And I've been warning about that. We could potentially get oil prices to go soaring, and this could force inflation back up higher, and we could get this whole big move to where we go at a much bigger clip. And we're not done yet till we start getting much higher. Then we get the big market meltdown. It's coming one way or the other, where the Fed will continue to cut rates and we probably go back to very lower interest rates before we're done. But this is kind of concerning. And I'm sure the Fed's looking at this going, well, if we cut rates and this baby goes breaking out, we don't want to look foolish by we cut rates and then all of a sudden we got to start raising rates right over. Amen? And I kind of felt that we really need to see a break below this swing point down here before the Fed would actually start cutting rates. All right. So let's tune in tomorrow, see what happens. But I'm thinking, just based on the calendar, they're not expecting the Fed to cut rates, right? See, current rate, forecast, leave it alone, kind of the sentiment. But the markets, even though it says this, the markets are still, I think, pricing in, or at least hopefully in their hope meter, pricing in that the Fed's going to actually cut rates tomorrow. And if they don't, that could have a negative impact on this bigger correction, meaning we get more of a pullback. So be extremely careful. And going into FOMC tomorrow, I can't imagine our markets going ripping out or just totally tanking before we find out what the Fed's going to do. So tomorrow is going to be a big day, as it always is. And I don't think it's so much what they say, it's kind of the press conference when Powell gets on stage and he does his thing, the jawboning. But this is feeling like we need a correction. After that big run up, I'm not convinced this little yesterday pullback or last week, yesterday's pullback and today's little pullback, that this is the end and we go breaking out. Possible. Possible the Fed does surprise the markets and they do a 25 basis point cut, and this pushes us up into the deeper part of our danger zone. But this would not be the correction I was looking for, right? So even if we get that last little push, still think we're going to get a bigger correction before we can then go to the blow off top. All right. So be extremely careful here. We got to where we needed to be. We expected some sort of reaction up here. Now the FOMC could be, hey, I thought you were going to cut rates and you sound like you're not going to cut rates anytime soon. That could be the big multi-point sell-off. Amen? So that's why I'm watching this closely. So tomorrow should give us more insight as to where we're likely headed. And I still think we need a retracement off of that low. We got a 618. We went straight to the Magic Fibo, just like we had anticipated. Now we're expecting some sort of reaction here. So far, so good. We're getting it. But I think the retracement back down should be more substantial, somewhere back to around that 19,000, 18,600, maybe even as low as 18,000. So we're talking of substantial retracement for those of you in the short term. So be careful. Would not be surprised to see this take a few weeks to do this type of move before then we go breaking out. That's the higher probability plan. We still get a blow off top. And I really don't see, unless the Fed does cut interest rates and talks, well, we're going to start cutting rates every meeting till the rest of the end of the year, this thing could go zooming up there very quickly. But of that list, I thought that was only about a 5% chance we would go blowing off the top. Now that we're due for some sort of retracement. And I'm leaning more this way before we can get up here than this baby just going ripping up there now. Got it? All right. And even the Dow, maybe we need one last little push so the Dow can join with the rest, where it did a 618 retracement, went 618786 retracement zone, and it went to the Magic Fibo. But this is the danger zone up here, bigger picture. That is the danger zone, and all of our markets are in that danger zone. Amen? Here's the futures version of that. We're in the danger zone. Be careful. And before we can start doing a blow off top, 46, 47, maybe 50,000 up here, I think we need a bigger retracement. And this is typically what you see. When you're below the Magic Fibo, a lot of times you'll get a big run into the Magic Fibo. Get your little three-wave correction to a 618 type of retracement. Before then, you can go breaking above the Magic Fibo, retest the Magic Fibo before we go to our blow-off top. Now that's kind of what I'm looking at, the bigger picture. We get a three-wave correction into the summer, and then we go into the fall, we get that blow-off top. Amen? But that's why I keep bringing it down. Rubber meets the road. If this turns into a five-wave correction, followed by a three-wave correction back up, then it sets up, look out below. This is probably off the table. Amen? All right. Look at the Nikkei. We look at Nikkei because it's global liquidity. Rammed right into the Magic Fibo. We said the same across the markets. Expect the markets, and that includes all of these, that we were likely going to get a run into the Magic Fibo. Wow, ES, NASDAQ, Dow's the only one a little short. Nikkei went right to it. So, man, how accurate is that? Now what? Likely going to get a retracement off of this big multi-day run up. We shall see. But if we get the blow off top, like we're thinking, then the Nikkei should join forces, start breaking above this 40,000 up here, and then their targets be similar to like the Dow Jones, so around that 45-ish to 50,000 zone. Then what? Elizabeth, I'm coming to join you, honey. Here comes the big one, Fred G. Sanford, coming on down. If we get rejected here and we don't hold that 618 retracement zone and we turn into that five wave down with a three wave correction, then this thing gets ugly very quickly, as our markets would go down considerably. So when someone asks, well, what do you mean by we're going to get a big retracement? Like I said, before we break 7 on the NASDAQ, the ES, S&P, before we break 7,000 to the upside, we're going to break 4,000 to the downside. And what is our downside? We're talking minimum. Let's go out to a weekly. Minimum, actually, I want to do the monthly so you can see where the Magic Fibo is on the monthly. It is the only one that is below 4,000. And it's sitting around that 3,300 zone. So from 64 to 66, minimum 35 area, yeah. And could even include going way back to COVID and the dot-com bubble burst into the big financial crisis. We're talking below COVID lows heading into that 2,500 to 1,500 zone. Wow. From 64, 65, 6,600 down to 2,500, as low as maybe 15, 1,600. Retest that dot-com bubble burst high, the financial crisis high. Yeah. And this could be the first leg coming down in an A, B, C, and we come well below that 35. But minimum 35. That's substantial. And that's what I mean. Before we break 7, we're going to break 4. And the first area below 4 is likely going to be this 3,500 zone. All right. NASDAQ, substantial. Looking at the month, you're talking down here 10 to 11,000 range. And we could be up in the 23, 24, 25, 26,000 area to blow off top to come all the way down to this zone. Yeah, that's the ticket. Going back to the same picture, we got the dot-com bubble burst. We were up around 5,000. We came into the 2007 financial crisis. We didn't recover like the ES came back to do a double top. We didn't recover as much. And then on the way back down with the 2007 financial crisis, we didn't make any new lows. But it still took many years between that top and reversal to breaking all-time highs. We're expecting this big correction when Elizabeth, I'm coming to join you, honey, does visit. We're talking multiple years before we see any all-time highs again. But you can see where the Magic Fibo is way down here, and that's a substantial drop, even if that's the minimum of that version. and could go much further to retest this 5,000-ish range where we were for the dot-com bubble burst. So somewhere between that 11 and 6,000 range, we could come and revisit. Ouch. Only one that is not going to participate like the rest is the Russell. The Russell baby. And we still expect when we get the blow off tops for ES, NASDAQ, etc., Dow, Nikkei, we get a blow off top. Then this blow off top is roughly this 2300 zone where this would end up. So like we were talking about the other day, I'll go to the daily chart so you can see a little bit more price action and stretch this out. But that we're expecting us to get up here somewhere in that Magic Fibo / up to the 618786 zone. My 618 is roughly around 2200, 2185, 786 is closer to that 23 area. So I'm expecting at some point we go into this when the ES is at a blow off top, NASDAQ is at a blow off top, Dow's at a blow off top. This represents a 618786 retracement zone. That's what we're reckoning as far as the blow off top scenario for the Russell is this 618786 retracement zone. So if we get that correction like we were talking about, we're probably looking at this Russell doing us a 618 retracement back down from that high, from that low to this high. We're probably talking coming around that 1800 zone. IWM somewhere around that 182, 180 area. I'm going to do IWM in a second. But while the other markets give us that correction and ES goes to that 53 to 5,000 zone, this will pull us back somewhere around this 1830 to 1800 area. Then we go ripping blow off top, and then we come back to this 21, 23 area before we then get Elizabeth, I'm coming to join you. Look at IWM. Same type of thing from that low to that high. We're looking somewhere around that 182 to 180 area, 182, 187, 182, 178 area. So be careful. I do think we're going to get up here before we finally get the Elizabeth, I'm coming to join you. But if we get the correction we're looking for, this is likely going to give us that 618786 retracement zone, somewhere around that 180-ish, maybe as low as 175. Give us that retracement before we then get the blow off top for everybody else. And this guy goes up somewhere between that 216 and 228 area. So when, for example, when ES is at 64 to 6600, NASDAQ is somewhere between that 23,000 and 26,000. Dow's up there at that 46, 47, maybe 50,000. All of those blow off tops. Then this guy should go up into this zone as its blow off top. Amen? So be careful with this. We're probably going to get that correction, and ES and NASDAQ, et cetera, get your correction. Maybe it's because of non-farm payroll. The Fed meeting that they say, nope, we're not cutting rates. We don't foreseeable future. I don't think we're cutting rates. We might not even cut rates the rest of this year. That could stir the sell-off disappointment and look for this retracement zone. So the key is to use what? Fibonacci retracements, your Magic Fibo, and of course, the software. Why are we looking for the dollar index to go lower? Well, daily's been grinding, but my weekly is giving us a little buzz, and we kind of said this the previous week. Expect a little bit of a bounce as this depressurized the slingshot lower in the direction of our monthly, still pushing lower. Very steep slope, angle separation. So this is why I'm not looking for the dollar index to go breaking new highs or anything like that. We're looking for more downside in the direction of the monthly. The key with the software is you get a monthly hooking across like this. What's the hook? PAI, price action indicator, PAI hook, trend momentum cross, then it means a weekly is going to cycle down. What happened? The weekly went from overbought to oversold, overbought toward oversold, like clockwork. Now we draw what we call the Fibonacci, in this case, paint the Picasso, that this is unlikely going to go and do this. We believe it's going to go up to slingshot lowers. We call a slingshot phenomenon. This is an oscillator. It goes from one extreme to the other, but you can see during periods of slingshot phenomenon, you can stay in overbought territory for a considerable amount of time. What is this? This is a monthly cycling up. A monthly takes much longer to cycle than a weekly, and in order for a monthly makes that cycle, the weekly has to cycle plus this slingshot phenomenon. Amen? So that's what we call the hook and the cross. PAI hook, trend momentum cross. So I wasn't expecting this to go cycling all the way up. I think we're going to end up with this slingshotting lower in the direction of the monthly, right? Again, the monthly is clearly down. So the euro's inverse. The monthly is up, steep slope, angle separation up. So we talked about buying at that 102. We were going to rally to those targets. And my weekly did what? It cycled from oversold towards overbought. So inverse relationship, we're looking for the MPA PE5 version 5.0 software on this weekly to turn over to slingshot higher in the direction of the monthly for us to continue that journey into that retracement zone. And what about this monthly? Well, a few months down the road, we get this in overbought territory. This will be in overbought territory. Then what? I think we'll start to see this slingshotting on the monthly time frame that allows us to grunt and grind our way toward that 140, 145 target. Well, same thing looking at the software for the markets. We have it in the ES for as NinjaTrader, same software in NinjaTrader 8 as in MetaTrader. So you have an option to run it in either platform. But the same rule is why we're expecting a little pullback on this zone, because we went into the Magic Fibo level and we're looking for a pullback. Well, look at the daily. It's overbought territory looking to turn over. Look at the weekly. It's still a little bit up. So that's why we're kind of going with the bigger picture that we're going to get a pullback, then we're going to go much higher. And we're looking for this to give us that blow off top. Then we're going to get a monthly, weekly, and daily overbought. Amen? So no matter how you slice it, come over here to MetaTrader. Same thing. Looking at the bigger picture. The daily's overbought. Went into the Magic Fibo. Why we're expecting a reaction to start pulling back? Because it's time for us to get a little pullback. Look at the weekly. It's still up, so we're looking for a pullback yet to go a blow off top. Look at the monthly. It's topping over, so I suspect we ultimately going to get a little slingshot back up, blow off top. So let me paint that picture of the Picasso based on our technical analysis. We're likely going to get another little slingshot up here, and we get that blow off top. And then what happens? We're going to get a monthly cycle down. And we haven't seen a monthly cycle down in a very long time, right? You can see we slingshotted here during that correction, but the monthly never cycled all the way down. Look at right there, magnifier, red, blue, but green, we call that the price action, and this is money flow. We never got all the way to oversold. And in this platform, it doesn't go far enough back to show you. So I'll go to this other MetaTrader that has more data, this one here. And you go to that same ES. Let me pull that up for you. There's the, here we go. ES. You go out to that bigger picture. And we can see we haven't seen a cycle down since when? 2007 financial crisis. Huh. So why are we expecting in the months to come, after we get what I believe is going to be a blow off top, We're going to get that big, huge correction down at 35 minimum, probably even lower than that, coming down to these lows over here, somewhere around maybe 2,500, 2,000. That's going to be a big monthly cycle down, and I would not be surprised to see a monthly cycle down, even a little slingshot action, as this will take multiple years to finally play out. Is this potential where this is done and it's over? Sure, it's possible, right? We talked about that now. What if we get that little 5-wave correction followed by a 3-wave correction to the upside? Then Elizabeth, I'm coming to join you, honey's already underway. And we won't get the blow off top. But if we do, this is just going to slingshot back up like this phenomenon that we've done so many times. You get a dip, blow off top, get another slingshot, go another higher, another slingshot, another slingshot. So why not one more blow off top? Then we get the big one. And again, we haven't seen that since the financial crisis way over here, where the monthly gave us a full cycle down. And I've been calling for this, Elizabeth, I'm coming to join you, honey, monthly cycle down for a very long time, right? Expecting that we were going to get a blow off top. Now we're getting rubber meets the road. Do we get it, or was this it? We shall see. But you see how the software's setting up. Monthly's overbought, weekly, daily, and what happens? Slingshot up, then we get this big one. Kind of like over here, coming into the 2007 financial crisis, we just kind of slingshotted along the way, and everybody thought, okay, this is a perfect time to buy a dip. We're going to go breaking out, and sure enough, we got the big one coming down, over 50% loss. Well, I'm looking for the same type of move, over 50% loss coming. And that will be our monthly cycle down. And wouldn't be surprised to see even a monthly cycle and a slingshot lower before we ultimately bottom somewhere between 3,500 and 1,600. So many year 3-wave correction. Before then, we go blowing off above 7,000. That would take us into the 2030s. Amen? Bigger picture. Any questions? So I don't do anything without the software. NASDAQ, same thing. Daily's overbought, looking for a little correction. Probably a 3-wave, a little 618 retracement. Could take weeks or even a few months into summer. Then we go blowing off top 23, 24, 25, maybe 26,000 to the upside. Same rule. All of these look very similar. We're turning over. Still think we're going to slingshot at least one more time to do that blow off top. That's kind of the plan, that this is going to go ahead and slingshot back up and we get that eventual blow off top. Amen? Any questions? Weekly, still up. So I'm still thinking the same type of thing. We get a little engage up to engage down to disengage and continue that cycle to do the blow off top. But we're due after this big bounce and rally for a bigger retracement. And we just don't see it yet, right? From this bottom reversal, there's IWM, we go back to ES, etc. We just don't see it yet. There's the Dow. We don't see the bigger retracement yet after this move. So one last push, maybe we get the push into FOMC, then we get the sell-off. So be careful. One way or the other, I still think we're getting a bigger correction, and more than likely, when Mr. Powell takes center stage, the markets like to sell off more than just go ripping higher. Only way I see the markets going ripping higher is if they do cut interest rates. If they don't, and then throw on top of that, not only we're not cutting interest rates, we don't see us cutting rates anytime soon, then that's going to set off the bigger correction. Kind of the plan. All right, so any questions on the markets? again, between the software, between the danger zone reaching our area, it's all stating the same picture. Here's a yum looking at this, looking at futures. We're into the danger zone. We're likely going to get a retracement. Is it because the FOMC and the Fed doesn't cut rates and they say, hey, we may not cut rates for months to come? That could stir this, but I still think more than likely we're going to get that blow off top. All right. And just for FYI, I like to post some different things. Looking at by the end of this week, we should have the majority of the S&P companies report. This is looking at the last multiple quarters over the last decade plus, 15 years. See quarter one of 10 all the way to quarter one of 25. On average, we're about 75% beat expectations. Right? The blue line is beat. Gray line is in line. Red line is the miss. So we basically have 20+% of companies missing their expectations, 75% beating it. It's kind of interesting. And this is looking at percentage by quarter. So is this the beginning that we get the last push to that blow off top as earnings finish up and we move into the next quarter? And we start pushing that blow off top into the late fall, perhaps before we get the bigger correction. But be careful. Even with this, most companies in the S&P are meeting expectations. On average, about 3/4 of the companies are beating. So that could be the catalyst as we go into the last few quarters of this year that pushes us into that blow off top. So I'm going to keep an eye on this if the trend continues. As we can see, it's pretty strong on average, and as of late, over 3/4 have been meeting expectations. All right, so let's see what happens, Mr. Tucson and others. The likelihood we just go ripping into the blow off top. Most people like ES, for example, but the likelihood we just go blowing off our top in that 64, 66 right now is lower than we get a correction first, and then we do it into late fall or even to the end of the year. But before it's still sitting there, before we break 7, we're going to break 4. And what is the level we're looking to break 4? That's at 3,500 down here where the Magic Fibo sits on a monthly chart. Amen? All righty. What about Black Gold Texas Tea, the Beverly Hillbillies? We're in a critical zone yet again. On this recent low to high, we're looking for a new lower low. We didn't quite get it, so this bounce. Is it going to fizzle? Yet another lower high, lower low? Or are we going to get this breakout to go testing up here at the Magic Fibo before then we come back down and make a new low? Let's see. So from the recent high to low, we need to get back above. I actually got too many on here. Let me take one off and pull this down to the recent low. So we need to start getting back above this 61, 62 area, right? We start getting closing above there. So this is why we're running right into the mag from that high to this low. You see my 618 right there, right around that 61 and change. And we got our 786 right around 63 right there, 62.90 area. We start breaking and closing above this zone, then expect we're going to go up here to the Magic Fibo. Amen? And I'm not convinced that even if we do this, Harold, we do this move and we go testing up here, that means the inevitable, we're breaking out. No, I still think we're likely, even if we get to the Magic Fibo, likely going to get one more push. I was talking about that during this rally. We came back in basically a double bottom, slight higher low. So we didn't get the lower low yet. So even if we get this bounce and we start closing above that 61, 63 area, 62, say 63, then yes, I think we'll go up here. But even after that, I think we're due for a new swing point low. I kind of said when we didn't hold 60, we'd go to 50. We hit 55, we bounced, came back, hit 55 area, we bounced. So do we get more legs, or just bounce, fizzles at my 618786 to the upside to push down below 50? So be careful on this. If you're taking this on a lower scale, I'd be definitely taking profits. So I'm in a position of authority, because this thing could easily come up to that 618 zone, which is right there at my 61 to 63 range. So I'm going to move this down into this current zone right there. So there's my 618786 zone right there. So if this baby goes in here, gets rejected, then say hello to my little friends 53, 52, 50. If we go breaking above this, then say hello to my little friend up here at the Magic Fibo. Amen? So are we going to get rejected to come down here, or are we going to go and close above so that we go running up here? The long of it, we close above 63, we're going to 69. The short of it, we get rejected and we don't hold this 618786, my basically 57 zone, come back to this low, then we're going to 53, 52/50. Black gold Texas T, up or down? And why should we have bought that bounce? Well, that's where the software comes in, my friends. Software set up a beautiful move on the lower time frames for you to look at a potential bounce. My 4-hour kind of set the tone with this little bit of a bounce. So what does that mean? We got a lot of resistance up here. We got the Magic Fibo on a 4-hour. We got the cloud, for those of you that use Ichimoku cloud. What's amazing about the cloud is once we get a hook and a cross, it means the lower time frame cycles. So the last time we got a daily to hook and cross, we knew the 4-hour was going to cycle, and that was part of buying that dip and running into that resistance zone. And I told you, take profits, we're likely going to come and get rejected. Now we're trying to do it again. My daily's not officially hooked and crossed yet. So if it does, then this 4-hour is going to finish the cycle, and we're going to get sucked and pulled into the cloud. But that's that 61, 63 area. You can't make this stuff up. Look, there's our Magic Fibo. And there's our 61, 63, which is the prior high to low retracement zone. So before we get real bullish to go up to, this is the 4-hour, to get up that run toward the daily Magic Fibo up here in that 69.70 target, we need to break that zone. Then it sets the tone and go up to the next Magic Fibo, which is the daily. Right? It's a thing of beauty. Beautiful. So be careful with this. This could easily be another high, low, lower, high, lower, low. Critical zone is at 61 to 63 area. And if we can't break it, then we're going to make a new low at our 53.52 first, then 50. If we do break above Harrow, this 63 area, then by all means, we're going to get about a $5 run, $5-ish run to go test that Magic Fibo. And what would I do if that happened? We close above 63, I target 69, and when we get to 69, close the trade, because we're likely going to get rejected from that, if we can get that high. So that's what I use day in and day out. Fibonacci extension retracements, the software, how it's setting up, and hooking across to tell us, so we're likely going to get a cycle on those time frames. If so, what would my next targets be? Right there. We break 63, we're going to 69. Just like we did with ES, that 618 bounce. We were going to go test the Magic Fibo. We did it. in order for gold right here, black gold Texas T to do it, we got to take out that 618 from the prior high to low. We got to take that level out to set the tone. We're going toward the Magic Fibo. All right. What about gold? Be careful on this bounce. This looks like we're getting into the retracement danger zone on this recent high to low. Here's my danger zone right here. We're in it. We're testing it now. So what happens if we get rejected? I still think gold is due for a retracement down toward the Magic Fibo on a daily chart, somewhere around that 2800 zone, maybe even 27 area. So this could be the beginning of a 618 danger zone retracement, rejection, and then we would start pushing a stair-stepping lower toward this daily Magic Fibo. We're long overdue. We haven't been back to the daily Magic Fibo in a very long time, which the longer we go, the more inevitable it's coming. So potential trade we talked about, we got a perfect entry we're looking at is, I think I already have it on here, GLL, ultra short. They're right around that 1050 price range. I think this baby is going to go ripping up toward 15. Right? So ultra short, this is leverage, so cuts both ways. But when gold starts to take that move toward that 2800 daily Magic Fibo, GLL is going to make a move up toward its Magic Fibo, and that's right around that $15 target. How long would I give it? At least until, say, like June, July. Give it some time. I would not do a weekly option and expect by the end of May, for example, we'd definitely be up here. Anything's possible, but I'd give it a few months, like July, give it a few months for us to take place on this reversal. So today, when gold is bouncing into the Magic Fibo in the danger zone, we're likely going to get rejected and move lower on gold. So let me bring that back up over here so I can have them side by side. We're likely going to see gold get rejected in this zone for us to do what? Move down toward the Magic Fibo. High, low, lower, high, lower, low. And that would ultimately mean GLL is going to reverse and go ripping up to its Magic Fibo. So Harold, if you do options, that's a little, it's already leveraged. So you do options on a leveraged product, that thing could, blow up. And gold could go breaking highs and this thing could go plummeting. So there is risk. There's always risk. All trading involves risk. I can't tell you what to do, but I am looking to add to my GLL position for the upside move, as I do think gold is likely going to get rejected from the zone and move down towards this target. And if you look at it, it's just been, we missed the Magic Fibo. Look, we're going all the way down to like February 24. That is a long time ago. And we're overdue. And the more of these far-reaching extensions we've been to, the more likely we're due for a pullback. Amen? Any questions? So no buy, sell to hold recommendation, but this could be a potential play for you. Buy some shares here at $10, $10.50. Maybe we go a little lower, maybe we don't, but this is an area where we could be nibbling and buy some shares for us to go up toward 15. Amen? All righty. And if you do decide to do the let's soak ourselves in gasoline and play with matches, then you could do options on top of a leverage product. Then you could, hey, when you're right, it's a beautiful thing. That would be quite the move if we do options on this and it works out. But if it's wrong and gold goes breaking out and this baby plummets on top of options, then that's just that much more explosive. But again, if I was going to do it, I'd push it out at least to like July. Give it at least a few months, not weeks, but a few months for this thing to play out. Any questions? All righty. Silver. Still think we got an opportunity. Silver. Is this ready to go breaking out? Not convinced we're ready to go breaking out yet, although I'm extremely bullish silver. I think if gold gets that push lower, silver's going to get another push lower. And particularly, I love SLV as a play. I already believe silver is going to $60 to $70 range. No ifs, no buts, no ands, no exceptions. Probably going to be a few years before, get there. But if gold gives us that pullback we're looking for, GLL goes spiking toward the 15, and gold gets down to that magic Fibo around that 2,800 or lower, then I think silver is going to be down in this 25 or lower. And I have some junk bids buying silver, adding to the position of and shooting for the higher time frame review. Come out to the weekly, show all-time highs way over here to COVID lows. This is what we do. From the high to the low, you rally and you close above a 618, not just a wick, but a body. Well, we've been above that 618 zone. We're still above it. And we had weekly candles, monthly candles. And when that happens, you close above the 618. What do you have? 75% chance you go into 1.1448 territory, and a 70+% you go into the 1272 extension. So this is why I think SLV is going to $60 to $70 range. No ifs, no buts, no ands, and no exceptions. That we get a dip below 25, that's just begging to add to your position. And again, I'm not looking at worrying about, was it going to be 26? Is it going to be by December 25? Is it going to be December 26? When are we going to get up here? I just buy shares and hold until we get up here. I can go into my broker, and which I have my junk bids down here saying, I'm going to add more shares of SLV at 25 and lower to then put on a sell order when we get to $60, $70 range. And do I think we're going to get here? No question. Absolutely, we're going to get here. But is it today? No. Is it tomorrow? No. Is it next week? No. Is it the end of the year? Maybe. Not a high probability by the end of the year, but maybe. Then is it what? As we get Elizabeth, I'm coming to join you, honey, and the markets get a big pullback, we go risk aversion, and what happens? The markets run to risk aversion. When the markets are crashing, Elizabeth, I'm coming to join you, honey. Everybody's going to dump in the gold, silver, etc., Bitcoin, you name it, and they're going to go running till we get that blow off top. But then when the markets crash and Bitcoin goes the crypto winner, and we get Elizabeth, I'm coming to join you, honey, and we get all this sell, 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 down goes Frazier, that's when gold and silver go to the moon, literally. So be careful. I do think we're going to get a dip, but clearly I'm not making a life on short. I'm just setting buy orders down at 25 and lower so I can then more than double my investment to get up to this $60, $72. And from the all-time high to the all-time low, this is a given. There is no such things as guarantees, of course not. But as far as the technical picture, this is about as given's going to get. It's just a matter of, is it 25? Is it 26? Is it 27? I don't really care. I'm buying down and I'm already in it, and I'm buying down more at 25 and lower to go to 60, 72. Amen? High probability. Yes, there is a little fee by just buying and holding this, a 0.5%. You come down here, it shows you right there, low expense ratio, but that little expense you pay to hold this for a bit will be far exceeded by your investment doubling and even tripling getting up here. Amen. But that picture has already been stated. 75% we're going to 60, 70+% we're going to 70, and that's my high probability. That's why I'm very bullish silver. And when this baby takes off, like it did this run to all-time highs back in 2011, etc., when we did that big run, it didn't take that long to get up there. So we could easily get to the 60, 70 by the end of this year, possibly, or certainly by the end of next year. But hey, it's a great buying opportunity at 25 and lower to go to 60, 72. And this doesn't mean that's the end of silver. When we get here, it's doom and gloom and it's going back to pennies. No, this thing could go stretching out to the 100, even start pushing multiple hundreds. But this is a very high probability conservative target as we move into 26, 27. Again, we could be here by the end of 25, 26 area, if not certainly by 26. So the timing is the toughest part, not where we're going. And tune in 6 months, a year, 2 years, whatever it takes. But tune in and we could all talk about it. Remember when I said we were going to go to 60, 72? No ifs, no buts, no ands, no exceptions. Well, guess what? Ladies and gentlemen, we're there. All right. I think you get the point. What else? We have Bitcoin. The big Bitcoin. What you gonna do? I still think Bitcoin is going to blow off top. We're in the danger zone for Bitcoin. We may need to pull back toward the daily Magic Fibo before we go breaking out. But the plan is still for Bitcoin to go up to our target zone at 150 to 175. It's done it every halving. The blue line is the halving most recently into 12 to 18 months post halving. That puts us into late fall, September, October. That Bitcoin should be pushing this 150 to 175 target. I still think we're going there. But since the recent, so we can zoom in on this, that recent high to low, right there, recent high to low, we're right in that danger zone, Emil. Right there, buddy. Move this over a little bit. We're right in that danger zone. So could we get another retracement back toward our daily Magic Fibo? That might be what we need. Not too far off from it. But you remember what we had talked about, that when Bitcoin goes to that target 160 to 175 area, 150 to 175, then what will we likely see as we finally break back above the Magic Fibo right there? That we were likely going to see a retracement back to retest it. Before then, we can go blowing doors up to our 150 to 175 target. So be careful. We get the markets to give us our correction, right? What if we do? Let's come in here. I'll start erasing some of these, get those big ones out of the way. I'll use my little ones. But we could easily see that we get this correction that we're talking about. Maybe it's FOMC that does it. We get the correction on ES, NASDAQ, etc. Bitcoin follows suit. Bitcoin's been kind of moving like with the ES. ES gets a big up day. Bitcoin's been kind of getting an up day, or vice versa. They're kind of holding in each other. So if we get that correction, Bitcoin will likely get us a correction. And what's the correction? Just like we're holding the 618 retracement to the upside, we're due for a correction. Well, you would use the low up to the current high, and we could see Bitcoin come back toward the Magic Fibo slash maybe this 83 area, somewhere between that 83 and 80 zone. So I don't have to go that far, but I still think the Magic Fibo's in the cards, if not a 618 retracement toward this 83. So somewhere between that 88 and 83. Maybe we retest this trend line we finally broke out. A lot of times you'll see trend lines as the weakest of the technical picture, but a lot of times you'll break them, come back to retest them before we bounce, and look how that fits. It's right between the Magic Fibo and my 786 move from the low to the high. That would be a perfect area for us to retrace back to before then we go blowing out toward that 150 to 175. The plan, if it all plays out like expected, ES will be doing a blow off top 64 to 6600 area. NASDAQ will be pushing 23,000 to 26,000 range. Dow will be pushing that 45 to 50,000 range. Nikkei, same kind of range at 45 to 50,000 range. So we all get blow off tops. Bitcoin should be up at 150 to 175. And you can hear the horrible thunder and lightning going on in this our area today in Texas. So if I all of a sudden just go blank, could be the power shutting off, something like that. Let's hope we can get the last few minutes in here before it does. But if that happens, you know what is unfolding. It's the bad weather we're experiencing at the moment. So in closing on Bitcoin, would not be surprised to see some sort of retracement back toward the Magic Fibo, maybe a 618 retracement, kind of in that zone, before then we go breaking out. Amen? And if we get the markets to correct, maybe it's FOMC, etc., we get the markets to correct over the next few weeks or so, month, then we go blowing doors. I still think Bitcoin's going to get to that target. We set it way back in 2022 when we got 24 low. No, it is 22. I got to go further. I'm on a daily. But when we got our 15,000, we kept saying, right, Emil, James, Ian, Errol, Mr. Tucson, Mr. Walter Storff, everybody right there, William Bruce, what if? And I said, man, buying Bitcoin below 20,000 is almost a crime. It's such a steal of a deal, right? And we had months of that action. I kept saying, you need to be loading up on Bitcoin at below 20,000. Man, that is just unbelievable. And sure enough, buying below 20, you already 10x your money well above 100 before we got this pullback, and we're not finished. So that's where this comes from. Every Bitcoin halving from the crypto winter low to 12 to 18 months post the next halving, Bitcoin has done at least a 10x. So 15,000, 10x puts us at the 150 mark. Then you use Fibonacci retracements extensions. Let me go to a weekly on this, show you the others, all the halvings. And during that period, we see we at least get a 618 retracement into that Bitcoin crypto winter low to crypto winter high. The last one, we topped out. We got a crypto winter low down here about 3,000. And what happened? We did a 20x on this one, 3,000 to 60,000. So 3,000, 10x would be 30,000. We did a 20x, 10 to 20x. There's your 20x the last time. So that's why we're watching this. And we did a what? 1618 retracement. From the high to the low, post halving the last one in 2020. What happened? We went to the 1618. Previous one before that, I don't mean to move that. I just did. But previous one before that, always grab the wrong thing. From the high to the low, that's the high, to the low. Let me make sure I didn't move it off of my low. Let me get this out of the way while I'm at it. So from that high to this low, we did a 272. Not only a 1618, but a 2.272 retracement. So it's rinse and repeat. From the high to the low, we did a 1618. This one we did a 272. The next one we did a 1618. And the one we're talking about, 1618, is where? my 175 target. So between the bottom and a 10x minimum, that's 150. And from the high to the low, the 1618 is up here at 175 this go around. So this is why your target zone was 150 to 175. And what we've learned, every crypto halving, it typically runs for 12 to 18 months before it tops and we start a new crypto winter low. Then you look at the calendar. When did we top out? 13, 17, 21, 25. So every topping in the crypto arena has been in a 4-year interval. 2013, 2017, 2021, and what are we in? We're in the year of the top and reversal for Bitcoin. That's why we think as we push into fall, September, October, should be the end of the run, and then we go crypto winter low. Well, how long does it take for us to get bottoms? It's every 4-year period. 18, 22, you go back further, 14 over here, right there, 14 low. See it? Rinse and repeat, my friend. So how do you take advantage of crypto? Well, you just buy Bitcoin and you hold on for dear life because you can get these rips and you get 70+%, 70, 80% decline along the way. But that's when you buy low, sell high. So when are we going to start to nibble? We already got it planned out for you. Believe it or not, we already got it planned out for you. We're going to sell Bitcoin when it gets to 150, 175 zone. And then we're going to sell, take our earnings and hold it till 2026. So let's come out to 2026. And we're expecting the last crypto winter low came in 2022. So we're expecting this new crypto winter low to come in. You can see the nibble zone in late 26 when Bitcoin makes its run up to that 150 to 175, which is up in this zone. We're expecting to get the crypto winter low where Bitcoin drops about 75% on average. Some were 80s and some were 78, etc. So we're kind of just rounding off about 75% decline. So Mr. Tucson, when we're up at that 150, 175, and we dip down into 50 to 30,000 range, is where we should be buying Bitcoin again for the next halving in 2028. So just like at 15 to 20,000, I was like, man, it's a crime to be buying Bitcoin at that lower price, where it ultimately was going. Well, let's do the 10x scenario. What if Bitcoin comes to 50,000? Well, 10x that going into 2028 would push us up near 500,000. Ouch. How likely is that? We shall see. And then we'll do the crypto winter low to, whatever the high is in that 150, 175 zone. Then we get the crypto winter low. We can do the Fibonacci retracement extension and look for where that puts us into the hundreds of thousands as well. So when's the best time to be buying crypto? Late 2026. In the short term, yes, we're going to go to 150, 175. So I'm not talking about, you can buy now at the 80, 90 range, probably go a little bit lower after that pullback to then go bouncing. But the plan is to get up to that 150, 175 at what? 2029, where we should top and reverse. 2025 this year is where we should be topping and reversing. And then we pull back into late 26 nibble zone, 50 to 30,000. So you can already go out to your broker right now and say, okay, I want to buy Bitcoin when it gets to 50,000 or lower. Put a junk bid in here and expect you probably won't see this price action until sometime in 2026, probably even late 2026. But then what happens when we start nibbling in this zone like we did in the 15 to 20 range? Right there. Then we look for the next halving in 2028 and we go 12 to 18 months post 28. So if we top out in 25, when's the next time we should top out? In 2029. Right? Then we rinse and repeat for the next halving going out into 32, which is way out here. So we'll sell in 2029. And as we get into late, and you go every 4 years. So if we top out in 25, 29, and we bottomed in 22, 26, then we'll look at nibbling again in 2030 for Bitcoin to then probably go upwards to $1 million during that, not the next halving, but the next one after that. We shall see, but we'll rinse and repeat and do the formula for you. And we already got where we're going to be buying in late 26. So tell me that's not an advance notice, just like we did here. Amen. What a deal that was. I even said even 20 to 30,000 is a tremendous deal, but it was a crime to buy it below 20,000 because it would do that. And we're not done. So any questions on Bitcoin? Still think we're going much higher, but yet go back to the current price action. We're in the danger zone of the prior high to low retracement. So we may need a retracement back toward the Magic Fibo to get this done. Yes, I think without question, we're going up here this 150 to 175. But I don't think we're quite ready to break out. And if we get that multi-week correction with the markets, Bitcoin will probably follow suit. Then when we go blow off top and we push that into late fall, that's the zone up here where I believe Bitcoin will ultimately go surging into that 150, 175, somewhere in that September, October-ish late fall area. And if everything lines up, Harold, everything lines up, where we get Bitcoin into its target zone by late fall. We get the ES in that 64 to 6,600 zone. We get NASDAQ up in that 23,000 to 26,000. We get the Dow somewhere around that 45,000 to 50,000. We get the Nikkei somewhere around that 45,000 to 50,000 range. And we get IWM somewhere around that 2,200, 2,300 zone. And we do the crypto top and reversal, market top and reversal. Elizabeth, I'm coming to join you, honey. Here comes the big one. Then we're looking for everything to go down, at which point gold and silver is going to go way up. And we'll start the process all over in late 26. Start nibbling on Bitcoin again and again. In my humble opinion, at this juncture, I think it's be somewhere between that 50 and 30,000 range. After we top out that 150 to 175, we get a 75% decline, puts us somewhere between that 50 and 30,000 range. So anything below 50 is worth nibbling. And that's what we have on this chart from that higher time frame, nibble zone in late 2026. So in closing, every 4 years we get a bottom, 22, 26, 30. Every 4 years we get the crypto blow off top, 21, 25, 29 to come. You go further back, 17, 13, etc. It's rinse and repeat. That's all you have to do is think about crypto in that manner. And I expect as we get into the late year, there's the Doge ETF and Ripple ETF and certain ones that are about to come out that were just delayed a little bit, pushing it into the second, third quarter, etc. So I think that's going to give us a big push into the fall. And we're going to see a lot of these blow off tops come into play. Amen. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. And don't forget, we do have the software available in NinjaTrader. We got all the same tools in here. You got your tons of indicators. You go to your indicator list, and we have tons of indicators. We go in here, and we can see under the MPA, that's our Magic Fibo, etc. We got all the indicators in here for you, big list of them. We have our trade management system in here. We also do our Fibonacci retracement extensions. When you go to drawing tools, you can see they have the MPA Fibo retracement, Fibo extension. That's what's on the chart that we run every day. Whether you're looking at TradingView, I just use this as a charting platform, but it's just real easy for charting. And I can make all my study notes, etc., while I trade through my NinjaTrader accounts and also my MetaTrader accounts. Amen. So again, we love and appreciate you. And as we like to close, that's it and that's all. We'll see you tomorrow. And we'll pick up with the big Fed announcement, which again, I think they're going to hold rates, and that might stir the market sell off to give us our correction before into the fall we get that blow off top. All righty, take care. That's it. That's all. We'll see you tomorrow.